Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. And today I wanted to briefly go over the best mortgage rates that are being offered right now. Some of them have gone up since the last time we posted the best rates. So I just wanted to go over each of the products available and to also talk about where interest rates are likely to go in the next little bit. So the best insured rate with no frills, that is, insured rates are less than 20% down, and no frills being that there are very few prepayment privileges, much higher penalties if you break your mortgage, and much harder to move your mortgage if you decide to. Those rates have actually gone up from 1.83 to 1.88. The best fully featured insured product. So fully featured, that means you have better prepayment privileges. So that's, you can get 15 privileges. That's you can put up to 15% lump sum payments every year, and you can increase your mortgage payments by up to 15% every year, which greatly reduces the amount of time that it takes to pay off your mortgage. The best rate for that has gone up from 1.89 up to 1.99. The best 5-year Insurable rate has actually gone down. It's from 2.24 to 2.14. So Insurable means that while you're not paying for the insurance, as you have at least 20% down, you still qualify as though it was insured. So that means you have to qualify based off off of a 25-year amortization at the Bank of Canada rate of 5.25. The best uninsurable rate. Uninsurable meaning you qualified at least 30 years, or you took money out of your house via a refinance. So if you refinanced and took money out to pay off debt, be it auto loans, credit cards, or do home renovations, anytime you take money out of your home, that's an uninsurable rate. So that's actually stayed the same at 2.34. Variable rates have also stayed the same, with the best being prime minus 1.1, and that's with prime listed at 2.45. Now I won't name any names, but it is important to pay attention to what the bank's prime rate is, as there are a few lenders that will list prime higher than 2.45 and look like they're offering a bigger discount. So it's always good to make sure that you take a look and see what their prime is listed at. Most lenders right now have a prime of 2.45, including the ones the ones that I work with. Now, as for where rates are going, we do see rates are starting to pop up a little bit. The Bank of Canada has stated recently that they're thinking of maybe having to raise rates as early as 2022. Previously, they had stated 2023 and 2024, but that timeline does seem to have moved up a little bit as the vaccine's been rolled out, and they anticipate much higher economic growth in the near future than they had previously thought. So as we start to see inflation kick up a little bit, the bank's going to be more and more tempted to start raising rates. With that set in mind, with that kept in mind, it's good to note that the banks will probably try to keep ahead of the curve, be ahead of the Bank of Canada. Reason for that being, if you think that rates are going up to 5%, well, you're not going to want to lend someone money for 5 years locked in at 2%. You're going to try to be ahead of the curve, ahead of the game, and raise your rates sooner than the actual rate that you pay goes up. So if you were looking to do something, if you were looking to, say, refinance your mortgage or buy your house, it might be better to get a pre-approval locked in now, something that's good for 120 days or for 4 months. Just so that you have that lower rate available. As we can see, rates are starting to go up a little bit here and there. The 5-year no frills product was at 1.83 for a few months there, and we see it's already gone up. Only 0.05%, but I mean, that's how it starts. So it's they may not go up, but it doesn't hurt you to have a pre-approval in place. If you like this video and you want to receive further updates for mortgage rates, mortgages in general, and real estate news, please do click like and subscribe. And if you have any comments, feel free to list them below. Thank you.